Hi, you're watching BQ Prime. We're here at the World Economic Forum's annual summit in Davos. It's a summer Davos, as we've been telling you for the last 2 days. And as you can see, we're making the most of this beautiful weather. So I've dragged out from the Congress Center Amitabh Chaudhry of Axis Bank as well. Thanks very much, Mr. Chaudhry, for speaking to us here on BQ Prime. We are here and it's a great place to be able to get a sense of what's going on in the global economy, especially the economic challenges that most countries are dealing with. What are you picking up here in Davos?
Well, as you know, what has been picking up for a couple of weeks now, we are seeing a scenario where inflation has picked up steam across the world. The central banks have announced a very clear policy to withdraw the liquidity from the system, to increase interest rates, in some cases on a very aggressive and a proactive basis. Has changed the commentary from managing the COVID crisis, managing the inflation, to actually now talking about a slowdown in economic growth, and in some cases even a potential recession. If you look at the reaction we have seen in, for example, some of the consumer good stocks like a Walmart or a Target which sell to consumers, I mean, they have seen sharp drops. And I think it just reflects the concern in the minds of investors in terms of what could span out over the next 18 months or so. India is not, obviously isolated. We are importing inflation. We have a clear issue with how the inflation has moved since actually last 12 months or so. The prints on both consumer CPI and WPI have been higher than expected. And frankly, the story is not over as yet. Or the RBI has obviously moved quite aggressively and proactively, but the expectation is that they'll have to do more as we move forward. And I don't think RBI is going to shy away from it. And as you increase interest rates, it will have impact on borrowing costs. It will have impact on consumer sentiment. It obviously, people are predicting it will have an impact on the GDP growth rate. And we have to be prepared for this. So a lot of stuff happening around us.
You've preempted all my questions at one go, haven't you?
So many things happening. Yeah.
Just to refer to what the Reserve Bank governor said just a few hours ago in an interview to CNBC TV 18, where he pointed out that we should expect more rate hikes, no brainer there. But he also spoke of what he called a coordinated action between the fiscal authorities and the monetary authorities, thanks to the excise cuts that we've seen,
Yes,
and the cuts on reining in prices of key commodities like metals. How much further do you expect the RBI is going to have to act? And will it continue to need fiscal coordinated support as well in the months to come? Or do you think we have started to see the peak of inflation?
I think we have to watch the inflation quite closely. I don't think the war on inflation is over as yet, because the pressure on some of the supply side, pressure on commodities has not gone away. And there is enough liquidity still sloshing around in the system. So I think the war on inflation will take some more time. Yes, as the governor has rightly pointed out, there is a coordinated action being taken by the ministry and RBI. But already the bond markets are pricing in hikes of anywhere between 75 to 125 basis points. It's already built to the price. Maybe the corporates are not seeing that price, but they will soon. So I do expect some movement in July from RBI, another maybe movement in August. I mean, that's just speculation at this stage, but anywhere between 75 to 125 basis points is what RBI needs to do. You have also seen some interviews by embassy members who have talked about getting the real rate, the repo rate down to zero, and which means at least that much of a hike.
Yes.
So we have to be watchful. The good news is that over a period of time, RBI has ensured that the rates being charged to the consumer are moved to all floating rates. So as and when these rate increases happen, they will get passed down, maybe with a little bit of lag. But it will mean higher EMIs. It will mean that the cost of borrowing will go up. As the ministry has taken some action on some import duties to bring the prices down, I would say hopefully it is temporary, because end of the day, all the private sector is taking investment decisions based on a certain policy parameters. And while you can tinker at the edges, I think the long-term policy should be stable, so that some of those decisions which they are taking in terms of large investments, the calculations don't go wrong because of some of these actions. I think government is smart, they know what they're doing. So hopefully this is temporary, just to ensure that the impact on inflation can be monitored and can be measured, and it can be kind of brought down to even levels in a more calibrated fashion.
Where do you expect rates to level out, both the benchmark and the lending rate?
I would say that another, in the July to August timeframe, it will go to pre-COVID levels. Maybe if inflation does not really come down to the extent RBI is required to do, because they have to maintain within a band, maybe some more action will be required. But I'm hoping slightly over pre-COVID levels is where we'll end up. This is assuming a lot of things from a geopolitical perspective. Things still remain quite unstable. People, the war in Russia, Ukraine is still on. Commodity prices are still very high, some of the highest we've seen. Inflation is very high across the world. So we have to be watchful. I don't think the chapter is closed as yet.
Of course not. Uh, the COVID pandemic, the fears were quite heightened that we would see another round of NPAs. We've somehow managed to, I wouldn't say escape that, but escape the worst of that at least, right? Maybe smaller businesses and individuals have taken more of the brunt, but large corporations have seemed to have survived through this. But now that we're seeing a rising interest rate cycle come on the back of the wars of the last 2 years, do you expect stress in the system to considerably heighten over the period of the next year or two?
See, stress will go up. I mean, as interest rates go up, there will some stress which will build in the system. But when you look at the larger banks and the larger institutions, I think people have beefed up their balance sheet in a very significant manner. A lot of us are sitting on very large provisions too, apart from the fact that we have gone through one full cleanup exercise in terms of our NPL. So in that sense, I am not anticipating any large NPA problems. But yes, some of the weaker institutions, some of the weaker NBFCs, some of the weaker banks could see more stress built up in the system. Uh, will it be prolonged? Will it be a situation where suddenly you will be surprised by the extent of losses? I hope not. Though in some cases, some NBFCs we have seen, some unexpected events happen. But I don't think, given the cleanup that has happened in the system, that is something to worry about.
So the financial health of banks
Yes.
is good enough right now to weather the potential worst effects of this rising.
As we see today.
As we see today, of course,
Yes.
everything is subject to
Yes.
as we see today.
Absolutely.
We've come to live in that kind of
Yes.
world right now, so I understand that. But let me look at it from the other side as well. What does this mean? Because you have a ear to the ground, you're talking to clients across an array of needs. Where are you seeing demand start to dip? Is it companies who are saying, hey, what, I'm putting that project on hold, let's wait 6 months? Or they're saying, no, I can see demand picking up, so I want to go ahead? Is it individuals? Or is it the SME cluster that is hurting the most right now?
I think you are seeing demand pick up across all the sectors, because after Omicron, things have opened up. It's evident from everywhere in terms of the movement, the logistics movement, the truck demand. Everywhere you are hearing people say that no, I'm actually running out of capacity. Now the next question is, do I want to invest in more capacity? And there, I think with the rising interest rates, also the inflationary pressures they are seeing, I think people will be cautious. But what COVID has done, and which I think continue to happen, is in every sector, you are seeing larger players are the ones which continue to take the bigger bets. The smaller ones do not have the capacity to take large bets or invest too much. The investment there is more incremental. So in every industry, it is, and you can slice it whichever you want, the 5-6 players are the ones who matter. They are the ones who have the capacity to invest and take large-scale investments. And that's what I think will continue to happen as we go forward in the future. Have the large players started making investments? Yes, on the commodity side. You are seeing, generally demand come across some of the other sectors also. But the credit flow from the wholesale side still remains weak, because during the COVID crisis, even before to some extent, the large corporates have all deleveraged themselves. They raise equity, so they don't need, and the business operations are quite profitable now. So they don't need large sums of credit to be able to invest. Hopefully, as India remains one of the largest or the highest GDP growth rate countries in the world, if things stabilize, I think they'll start needing credit.
So you're
more.
seeing no weakening in demand for credit?
No, actually, if you look at from April, May onwards, the demand for credit has actually gone up. It has, for the first time, touched double digits. But most of it is still coming from retail.
We are now in the end of May.
Yes. So
and we've, I think the out of turn interest rate hike, if I may say so, which took some people by surprise, the timing and not the action.
Yeah, not the action. I think so.
The timing and not the action.
And the
so I'm just
incremental impact
is
visible.
Are you seeing people pull back at this point in time?
No, not it. And
so
the incremental impact of that is limited.
Demand either amongst large corporates or small businesses or even the retail borrower.
The momentum continues. Actually, the credit growth has gone up in April, May, but need to be watchful, because there are just too many factors at play here. To just say that, because the credit growth has been great, will continue to remain so. We know we are expecting, interest rate hikes very near in the future. We know that the commodity shock at some stage and this CPI and WPI will bite the customer. It is biting, will start biting more. and that's why government has taken some action in terms of easing some of the prices. But at what stage it starts impacting customer sentiment, at what stage it starts really lowering the demand growth, we have to watch for. So right now, all good.
Right now, all good.
Yes.
No slowdown in demand
Not
in any
exactly.
fashion whatsoever. I have just one quick other question to ask on this, and that has to do with your SME book. I think your NPA ratio is the highest there. It's not very alarming, but it is the highest there. Do you see it level out anytime soon, or will it get worse from here onwards? Because small businesses have had demand, GST, a slowing economy, then the pandemic, and a huge working capital crunch, and now a rising interest rate cycle. That's making it very difficult for them to survive.
So let me correct you here.
Okay.
As far as the SME book is concerned, we have had perhaps the best period over the last 12 quarters in terms of the quality of our SME book. So actually, it is doing quite well. We have pivoted over the last 3 years to a much better quality book, and it is reflected in our NPLs. So in that sense, no, I think everyone does not disclose the data exactly the same way. So maybe apple to apple comparison is not possible. But we do believe, at least when we compare ourselves to the premier private banks, our quality of the book is
I was just
similar.
saying, in your own book, relative to the other
Yeah,
loan
comparatively,
segments.
yes. Obviously,
That's what I
SME
meant
has
to
a higher
say.
list.
Yes.
Now, but when you and I look at the SME book, frankly, we are trying to grow it as fast as possible. It grew 25% last year. We're trying to register similar growth rates in our SME book because we do believe the opportunity is huge. It extends to the mid-corporate book on the wholesale side. It extends to small business banking on the other side. So from our perspective, if I was to look at any business which is a couple of crores business going up to more than up to 1,000 crores, this is all huge growth areas for us because we believe we know how to run that business. We believe that's where the growth is going to come from. That's where the capacity utilization has now peaked and people will start investing more. So looking forward to growth coming from that.
Okay. One of the reasons the markets were a little tepid to your quarterly earnings was, I think, a rise in your operating expenditure. What are you investing in? Can you take us through the details? When does this start to plateau? I think there were a bunch of guesstimates in a variety of research reports, but I wasn't able to get a clear answer. So I'm
So
looking to
yes,
you for
I
that.
think we had told the street that we will get our overall cost to asset ratio down to 2% by end of financial year 23. The only change which we made was that we are seeing a huge amount of momentum in our various businesses. For example, in month of February and March, we were the largest issuer of cards in the business, we were high by a margin. We have 31% incremental share in the merchant acquisition business. We are seeing great traction on the digital side. So a question we were asking ourselves in the last quarter, which has just passed by, was should we try to meet that guidance which we have given on the 2% cost to assets, or should we allow, because the business growth initially will require us to spend a little bit, the income will come a little bit later, or keep this business momentum going and obviously reap the rewards in the long run. We have not moved away from our aspirational 18% ROE number. We have not moved away from our commitment to bring this down to 2% cost to assets. But yes, the street sometimes says, no, you change your mind. So yes.
But you haven't changed your mind.
We have not changed our mind. We just pushed it out a little bit. And we said, look at our data. If you look at our
pushed
data.
out the target to when?
Absolutely. Well, we said we will let you know, but somewhere in the financial year 24, we will obviously get it down. And by the way, we've not given up. We've not said that, oh, by the way, because we have given the statement, suddenly the focus on cost has gone away. It remains very much so.
I'm not pushing you actually.
but-
I mean, look, I know that analysts tend to look at many of these
Absolutely.
numbers in
So,
minutiae.
our view
That's
is
their
that,
job. What are you investing in? That's what I want to know.
So we are investing, if you look at
That's
some of
where
the-
my interest lies actually.
we are investing across all our businesses. As I said, on the retail side, credit cards, merchant acquisition, retail assets. Bharat Banking is a big initiative for us. We hired a very senior resource, and we believe, there is a huge amount of opportunity which is available to us. I told you about the SME side, which we're investing in. We're investing in mid-corporate. Digital is something which we announced 3 years back. We're moving to digital too. So, technology spend has gone up, has doubled over the last 3 years. So the demands on expenses, given the opportunity out there, is huge. It's a question of what you parcel out and where you focus on. So in that sense, it is all about growth. It is all about technology and scaling of our infrastructure. It is all about digital banking, but the revenue and the profitability impact of it will take some more time to come, and that's all there is to it. So we do believe our platform is great, it's moving in the right direction, our metrics are moving in the right direction. More than 60% of our spend is revenue linked. The balance of it is obviously technology, where we are scaling up our infrastructure as we're growing. It is partly also linked to collections, because during the COVID crisis, we ended up spending much more on collections than what we had anticipated. So our collections costs have gone up. Also, please understand, given some of the conservative policies which we have imposed on ourselves, sometimes the recovery which you're getting from a customer, you're not getting it through the net interest line, you're getting it through the provision line. So, it is just a question of how you're stating some of the numbers. It is what it is. End of the day, frankly, if you look at last quarter numbers, which a lot of the people have missed out, if you take out the one-off items on a consolidated basis, our return on equity for the bank was 18% plus, which was higher than a lot of our other peer banks. So we have touched 18. I know last quarter is the best quarter of the financial year, but we have demonstrated to the market that yes, we can get there. So we are on the right track, headed on the right direction. Execution remains the key, which is what we focus on.
That, ordinarily when a business is investing, that speaks of the confidence the business has in the growth environment, or it speaks of the desire to capture market share in a volatile environment.
No, both.
Which one of it is?
Both, because in this volatile environment, a lot of people will not be able to invest, and we would obviously want to invest and capture market share.
When you say a lot of people, who are you referring to?
Some of the smaller banks, some of the public sector banks, some of the smaller banks who, obviously they have to make some choices, right? So there a opportunity there. And second, frankly, we do, given the platform we have, we do need to win our rightful share in the marketplace. So forget about the market opportunity. Axis Bank should be playing at a certain level, and we should keep investing and keep trying very hard to play at that level. And that level is not where we are today.
Okay, you talk a good game. I want to ask you what you expect will be the competitive landscape scenario once and if the HDFC Bank merger goes through, because it suddenly catapults the size of private banks to a much larger, book. So, are some of these investments or your comfort in pushing out some of your promises of bringing down OPEX, etc. Okay, one promise of bringing down OPEX is partly that also driven by the fact that you know that in maybe 2 years you will be competing against a giant, and so this is the time to fortify yourself.
We already have a giant in the marketplace, SBI, which is a quite aggressive giant. Another one gets added to it, and we cannot be ignorant. And we cannot ignore, something is going to become real very soon. And they will. They are an aggressive institution. They will remain an aggressive institution.
Sure.
They have a problem to solve on the deposit. Yes, I mean, they have a problem to solve on the deposit side, and they will obviously, be quite aggressive about it. I'll give you two kind of answers. One is, if you look at a market share in deposits or advances, it's still quite small in comparison to what the overall opportunity is. So at one level, as I keep telling people internally, yes, obviously there is competitive intensity will increase. It was always there, it will always be there. But let's focus on what we have and what we should have. And that distance is not very too fast to traverse. Second, yes, they might be doing something in the environment which will force us to react. So use the opportunity till they get merged to obviously get as much traction as possible so that you have the momentum behind you. I do believe that there are a number of great banking platforms which are there in the country who can compete head on, doesn't matter what the size is, in the individual businesses all of us have. And that's exactly what we'll do. They are investing in technology, we are investing in technology, or there are at least 3-4 banks which will have a digital platform, a technology platform, which will be one of the best out there. Then it's a question of who reaches the customer first and is able to connect with the customer in a particular way. It is basic day-to-day blocking and tackling in the marketplace.
So you're saying your decision to continue investing even in this environment was not necessarily driven directly by the announcement of HDFC or reinforced by that announcement?
Absolutely not. I mean, when we acquired Citi, HDFC and...
So yes, I was just going to say that your Citi acquisition timing is fortuitous because it will help beef up your size in anticipation of, where this market is headed, right?
One of the core parts of GPS strategy which we announced in 2019 was premiumization of our franchise. And Citibank speaks to that premiumization in a beautiful way. They have been in this country for 120 years. The kind of customers they have, the quality of customers they have, especially on the wealth management side, just upgrades Axis Bank in many ways. We become the third largest wealth management player, third largest credit card player. We get 1,500 corporate salary accounts, which has been a weak area for us. Great set of employees, etc.
Okay, yeah. So I've read the press
You've heard the story before.
Yes, I've heard the story before. Yeah, okay. That's why you paid more than any competitor for it?
I don't know what...
I know there are concerns right now. Well, nobody is questioning the acquisition. What you get in the acquisition is great. It's what you paid for it and when it'll pay for itself is the question I'm putting to you. So I'm not questioning the acquisition. I want to know when you think that this might start becoming financially accretive.
So it will become accretive pretty quickly because...
What is pretty quickly? You just pushed out one target to FY24.
The moment we take over, we have already said to the media and to the analysts that we have to write off the goodwill. And post that it becomes accretive automatically. That's how the maths works. But more importantly, It will add to our NIM. Forget about the write-off. It will add to our NIM. It will add to our ROE based on the numbers that you have. Do you talk about valuation? Let me quote the analyst reports itself who have talked about the valuation. And one analyst report said that if you look at comparative players, let's say just in the credit market alone, credit card market, the value which they're paying for just the credit card business will justify what they're paying for it. By the way, please understand that recently a transaction has happened in the wealth management space. The size of wealth management, Citibank's wealth management business is 40% of the wealth management business which has been acquired by our private equity players invested in it. So when you kind of individually add the pieces, I think the valuation is good for us. I don't know whether we were the highest bidder.
Yes, you were.
No, sometimes these things don't happen that way. It is also about the ability to close the deal in what time frame, under what conditions. So we believe we have paid a fair price. We quoted a price. We stuck to that price, and that's how the deal got consummated. A lot of time it took to announce the deal because we spent a lot of time in ensuring that the bells and whistles will be taken care of.
Okay, let me rephrase my question to you. At what point will you know? I know that right from day one, once you write off your goodwill, like you pointed out, you add the numbers, your client base expands, your market share in the wealth business expands, all of that. So it starts becoming useful right from day one. But at what point, or how will you judge whether this acquisition has delivered what you sought for it to deliver? Give me those metrics that we can hold you accountable by.
We will.
I know retention of clients is a big challenge here.
There are 4 things. We will obviously tell the market. We haven't announced to the market what those numbers are.
So you can surely tell us
not
now.
Here,
it's perfectly fine.
We'll do it at the right forum. But don't get me wrong.
It doesn't get prettier than this, Mr. Chaudhry.
But yes, it will be around customer retention, staff retention. It will be around technology transfer and stuff of that nature, and what is adding to our overall franchise, and obviously the cross-sell. We have some data of Citi. We will start getting detailed data of that franchise only once the CCI approval is in place.
So you still don't have
the detailed data
on the 3 or 4 key.
No, we have the handle on the macro level, but for us to dive deeper and start promising numbers, it is very important to have.
I'm not asking you to promise me anything. Give
so
me
we'll do it at the right
broad
stage.
idea what
So
you're
we will come around some matrices on 4 things: customers, staff, technology, and cross-sell.
Okay, so you want to be able to retain customers. It's
Reduce
likely that you might
get
want
most
to
of the
reduce
staff in, get the
but
technology.
you might want to reduce staff.
No, our attrition rate, Axis Bank is 86,000 employees.
I know.
There are 3,500 employees. They're absolutely, no, we're not seeing in terms of reduction of employees. We can absorb them without a problem.
So let me pick one, okay? Technology and all is very technical to talk about here. Customer retention strategy. What can you tell us about how you're going to go about making sure that Axis provides the same kind of premium service that Citi, used to? And
if you don't do that, this acquisition will be a waste, right? I mean, we are trying to upgrade ourselves in terms of not only providing that service to the Citibank customers, but take it to a lot of other customers.
Watch what I do, not what I say.
So yeah, absolutely. I mean, it's a given that I have to do that. By the way, one of the few private banks of the size we are at, Axis Bank has successfully created a Burgundy private franchise, which was launched on November 19th, and we are now 87,000 crores of assets under management.
Okay.
Amongst the top 3-4 banks, we are the only ones who created that, and during COVID. So we have proved to the market we can do it. Now this allows us to build on that.
So you've given me no new information
I cannot
on
give
your
you more information.
post-Citi acquisition scenario, your milestones, goalposts.
We'll give at the right stage, yes.
Not at this point in time.
No.
Okay, it's too beautiful a day to argue. So last question, what is going on at Axis Mutual Fund?
So Axis,
I know what's going on, but I'd like
I will try to share what I can. I mean,
I'd like for you to explain
we don't have anything
why
to
this
hide
has
here.
happened. And
so based on some market reports we had got, we initiated an investigation where we did it.
And you didn't disclose that you were initiating an investigation.
You can't do that. You don't do that. You don't upfront come and say, by the way, I'm doing an investigation. You don't do. Something has to be established before you go and start doing this. So we heard some market chatter.
How did you hear market chatter?
It came to me.
A whistleblower letter?
No, it's not a whistleblower letter. It was just that some people in the market said that we believe something is happening there. Please check. And
someone picked up a phone and called you and said, Mr. Chaudhry, we think one of your fund managers is front running.
No, they're not managers. There are some people who are. You should investigate it. We ordered investigation and we proactively did it. We could have ignored it.
This is what, a whistleblower hotline or something like that? How do people just...
Yeah, if you're in the market, people do talk to you, right? So when you hear this from people, it's important that you react to it. You can't just sit on it. We did that. We ordered investigation. We hired a legal firm to do it the right way, who in turn hired a forensic expert, well-known names in the market. We gave them carte blanche to investigate. We as in a mutual fund, we have limited data because we see only one side of the trades. The moment we saw something which was a transaction we suspected, we suspended them. It is important to suspend them and not terminate them because first you want an explanation for what has happened. Secondly, you want their cooperation. Once we cross that bridge, we have terminated the two employees. In one case, yes, it looks like as of today that what they have done is more serious. In the other case, there's a violation of mutual fund
What do
rules.
you mean by serious?
Looks like there is some transaction. So let's see.
But you are still not disclosing
We
the
will
full
not
extent
because ultimately
of exactly what has gone wrong.
No, because
your
again,
mutual fund subscribers need to know. Unit holders need to know.
See, we are seeing only a part of it. Because I don't know what people did on the other side. I don't see those trades. See what we can see. We have taken action. We have not stopped there. We are investigating and looking at everything out there, just to ensure that it is restricted to some individuals or it is something which cuts across the mutual fund enterprise. Till now, whatever we have found, based on that, action has been taken proactively. And we have not shied away from taking tough action. We will not shy away from taking tough action. Our view is that, and obviously we are working with SEBI and keeping them updated, that they can see much more. They have the regulatory powers to investigate the things the way we cannot. And we will, of course, fully cooperate with SEBI if anything happens.
Sure. I mean, I get that.
But our funds during this period have performed.
Does it go beyond just two people in the organization?
Right now, no. There's just two. By the way, we are looking at all the relevant people involved in our investigations, and right now we have found something against two people, and we have taken action. And by the way, this investigation has been going on since February.
So what failed that this?
It is no, because see, a lot of these people have been in the market for a long period of time. It is there is no.
You're still speaking in circles to me.
No,
I
not
still
circles.
Don't know
I mean,
the
as
direct.
what
they did wrong.
If I have to disclose it,
I know the
broad
term
yes.
front running and the meaning of that.
Market
but
is
I
using
don't
front
know
running.
anything more than that.
So we have.
So exactly what did they do wrong?
Not the place to disclose it.
Your mutual fund unit holders.
Let's talk about it.
As to what's gone wrong.
Whatever has been found is so small in comparison to what the media has been reporting that it's not worth comparing. Whatever has been found, the little that we found. Wait. I cannot disclose more than that. Second, wherever we have found even an iota of rules being broken, we have taken action. Third, we will continue to investigate, and if we find anything, we will take action. Even more action necessary. Fourth, I think given how this market works, as an institution, we are limited in terms of what we can investigate and what we can bring forward. Fifth, if I find anything, I have to give a chance to the individual on the other side to explain what exactly happened in that particular case. All that is being done. The board is actively, looking at to close this as quickly as we can. We have taken invariably the tougher stance rather than the lenient stance. We have kept the regulator updated, and please appreciate, we on our own volition did it. During this period, whatever the period is, our mutual funds have done exceedingly well in terms of performance. I'm not saying that's a justification so we can do this, but whatever has been found, the little that has been found, the number is meaningless.
Yes, well, since we don't know the number,
it is meaningless. I'm telling you, it is meaningless at this stage, based on what we know.
But till you don't make a public disclosure,
we cannot.
Really
we have to till we finish the report. There's no point in
And when will that happen?
It is not like a police investigation every day. We are hoping in the next 6 to 8 weeks we can get this closed.
Okay, fine. One final question. This conversation has been full of confidence from your end for the economy, broadly speaking, despite the uncertainties, and specifically for the opportunity for Axis Bank, despite what one might call some headwinds, right? What challenges do you foresee over the next 6 months to a year, or maybe even 2, that we should be aware of that could change this or shake this confidence a little bit?
If you're talking at the economy level, then the volatility is just too high.
Sure.
The events are happening too quickly. As far as Axis is concerned, we just have to focus on execution, and that's what we have to be. We have to get the execution right. We know what our destination is. We know how to get there. We have various pieces and parts of it in play. If we get the execution right, the market is large enough and the policy is large enough, and I think the right kind of management team is in place to be able to execute on it and get to the destination we're looking for, which is our aspirational number of 18% ROE over a period of time.
Okay. Thank you, Mr. Chaudhry, for your time here in Davos. Enjoy the rest of your week and this day. Thank you.
Thank you.